India's semiconductor ambitions are gaining momentum, with a new report projecting massive growth in the country's chip market over the next decade. As global supply chains shift and demand for electronics surges, India is positioning itself as a key player in the global semiconductor ecosystem. According to a report by Deloitte, India's semiconductor market is expected to grow nearly sixfold to touch $300 billion by 2035. This marks a sharp jump from current levels, driven by rising demand across sectors such as smartphones, consumer electronics, automobiles, telecom, and industrial applications. India's digital economy expansion and increasing adoption of technologies like AI and electric vehicles are expected to fuel this surge. A key highlight of the report is India's push towards self-reliance. Around 60% of the country's semiconductor demand is expected to be met through domestic production by 2035, a significant shift from the current heavy dependence of more than 90% on imports. The report suggests that this transformation will be driven by government initiatives, including incentives for chip manufacturing, design, and packaging under the Semicon India program. Currently, India's semiconductor market is already on a high growth trajectory, with estimates suggesting it could cross $100 billion by the end of this decade. The next phase of growth will depend on building a strong domestic ecosystem, including fabrication units, supply chains, and skilled talent. Global trends are also working in India's favor as companies look to diversify supply chains beyond traditional hubs. India is emerging as an attractive destination backed by policy support, a large talent pool, and a growing consumer market. However, challenges remain. Setting up chip fabrication units requires massive investment, advanced technology, and reliable infrastructure. Experts say sustained policy support and global partnerships will be critical to realizing India's $300 billion ambition.